Hi, everybody. Good turnaround Tuesday to everyone. I think the dollar's getting overdone to the upside, and I wouldn't be looking for any kind of crash in here, but I don't know why we can't pull back to 98.20. So I'd be careful about being too bulled up on the dollar right here. Interesting action in the end so far. Last night's strength, we were unable to take out this 110 high. Looks like it might be a failing rally. This could be a turnaround Tuesday trade, maybe a scalp if you're not looking for a lot. We could have A, B, C, maybe back down to 109.5. Some type of day trade. Tight stop. You could even use like a 20, 30 pip stop here to see if it happens. S&P's right here. I'm trying it again. I've heard numbers right around 33.76, so I have a partial on. As you could tell, we're not confirming the high here. It's still glaring on the daily. Going to need a pretty good break to get a two-day reversal. It's going to be all the way down at 33.12. But I look at this, and if we run out of juice, just thinking, I don't know, I can't I'm not good at labeling, but I'm just thinking that this was pretty close to 120 pips, this break right here. And from wherever we peak here, maybe we get 1.618 of this. Maybe it's possible that this was A within a regular B, where you make new highs, but it's still a B wave, and then you get a C to the downside. Hello, Teddy. Nice to meet you. Shahab, how are you? Brock, aren't you here today? Hello, Monica. And gold pulled back a little bit. I tried some shorts yesterday from 73. I've taken a partial. So this is very yen dependent. If the yen rolls over, you should expect a continuation in the gold. My view is I still think that there's a chance that we challenge these highs because of this. It keeps, every time I pull up the gold chart and I look at the daily, it keeps, hitting me right in the face that, God, I've rarely seen important tops with an RSI reading of 86.41. You need momentum to wane. Now, if we got a new high over 16.15, I'm pretty positive, unless it goes right to 2000, we're not going to take out this RSI high, and we will have some type of daily divergence up there at new highs. So that's something I'm hoping will happen, actually, especially with the COT set up and people not paying attention to it. People don't realize that, a lot of these commercials are miners. So some of their short positions are hedges. They're not really playing the market for gains. They're just locking in prices. So we'll see what happens there. I thought we were going to get a new low in the oil, and it's putting in a decent day here. So went all the way to the brink, trying to turn. I'll be patient. I'd like to see one more new low before I attempt it, especially for getting close to where the S&P may correct. I don't know, for 15, 20 minutes or so. What do I do with the Euro USD? I look for down here, maybe look for some type of day trade. I don't like to buy it when EG looks negative to me. Okay. That Shahab, that kind of stacks the deck against me. So I'd rather see, euros down 7 and pounds up 16. I'd rather see it reversed for me to want to scalp alongside of Euro USD. Do you understand? Hi, Brent. How are you? So when EG is negative, you know, I feel like I'm really fighting the current. But say, for example, euro was down 7 and the pound was down 27. That would be okay. So I do nothing with it. In fact, I want to see what EG looks like at new lows, in fact, right? So maybe not new lows, but see what it does here. I'm thinking, you know, maybe one more shot down, something like this. Because I still think there's a pop left in euro pound. We'll see what happens, maybe right around here. See what happens there and look at 1 hour. Yeah. So I hope that answers your question. I do nothing with it. You know, it's okay to do nothing. And remember the example, and I'm going to bring Blake on in case there's news, that a lot of people, and some people are very good at it, portfolio type trading where they have, you know, 5 to 10 different positions working. I'm telling you guys, it only takes one, and it's not a theory, because I watched guys on the floors that never left the same trading. If you're in Europe, you call it a ring. In the US, we call them pits. All right. They never left the same trading pit for their whole career, knew that market like the back of their hand, and they didn't have to diversify into other instruments. So I heard an expression that if you can't remember the last price of what you trade, you're trading too many things. Write that down. Okay. So I think you're better off, especially if you're fairly new, to narrowing your focus. You could screen everything, but it doesn't mean you have to trade everything. Okay. So Blake, hope that your wife is feeling better and she's getting the kids up this morning. How's she doing?
She's on the mend. She's on the mend. So
Well,
yeah,
those
thanks
stomach
for.
flus.
It's not stomach. It's just more
Flu.
of just I think the seasonal flu. I think that's what the euro has right now.
I knew you were going to say that.
Yeah,
Because I was thinking the same. I would jinx you owe me a Coke.
Yeah. You know, we got questions from, you know, some people like, hey, what do we do with the euro here? You know, the euro is just continue. It looks like we're going to take these lows out. I mean, remember the head and shoulder pattern really completes down here at 108.80. Like I said yesterday, it looks like it's going to give us an overshoot. But the problem with the euro is there's no rally to be sold. So you do one of either two things. This is the way that I'd play it, even though I'm not playing it because I just, you know, like to me, I'm not going to sell something that's oversold. So or what appears to me is oversold. But if you think this is just a one-way ticket, then you either get short, put in a tight stop, or, you know, like above some recent highs, like in this example, like maybe it stops above today's highs, which is 920. I mean, you're only risking 15 pips, or, you know, you just get out of the way. And I choose to get out of the way. You know, I'm more of the, I tend to be more conservative when we're in a strong trend. That's what I do. You know, and it doesn't make it right or wrong. I tend to be a little bit more conservative when we're in a strong trend. So, you know, like I said, I tend to just stay away from situations like this. But the euro is, I mean, the threat of a break through this support, I think, is quite high at this point. Because I mean, look how weak it is, Dale. I mean, it's just, you know, nonstop hitting it with the ugly stick. It's like the new POS, or the piece of cellophane. But yeah, you know, we continue to be oversold, but we can be more oversold. So, you know, that's my 2 cents with the euro. You know, today we do have the quote unquote Humphrey Hawkins testimony, which was you know, coined that after the late Alan Greenspan, but you know, wait a second. Hey, Coach, are you still here?
I am. Good morning.
Hey,
I am.
yeah, hey, Alan Greenspan, he passed away, didn't he?
No, he's still here. It
I
was
think
Volker.
he's still
No,
with us.
Volker did. Alan Greenspan's still
Yeah.
around.
Yeah,
I was thinking to myself when I said that, I'm like, hey, wait a second. Alan Greenspan is still alive.
he carries a lighter briefcase now.
I'm sure he carries a lot lighter
In
briefcase.
fact, his wife does.
I will. I will
Newsy.
tell you a story from.
The briefcase
I was.
indicator.
You guys know that Kevin Ferry, that used to be on CNBC for, you know, 20 years. I see him up at the wineries whenever I go to Napa. He told me a funny story once about Alan Greenspan and about the gist of the story is he stinks really bad and smells like cigars and body odor, and nobody wanted to sit with him or around him. Like no one. Everybody would avoid him like the plague.
A bit like Steve then.
He's
Huh?
married.
What's that?
He's married.
He is. He's married to what's her name from NBC News?
Yeah.
Yeah.
I can't
no.
think of her name, but
I want to say it was Corky. You know.
yeah.
Oh, she has
Corky Romano.
No, she has. You'd have to Google it. But anyway, I'm not going to do that with you right now. But he's not. He's not. He hasn't passed away. I'm sorry. I was thinking Volker, and it's when you
Volker,
get up at 4
the liquidator,
in the
finally was liquidated.
What's that?
He was called the Great Liquidator.
You're the Great Liquidator, yeah.
Because he raised rates to like we had T-bill rates of 20%, and he engineered that deflation for Reagan.
The thing about Alan Greenspan, and he was a way more exciting Fed governor than we've had in recent years, you know. And so I truly miss the briefcase indicator for sure. But that's not what I want. I don't know why I was mentioning this anyway. Because the testimonies today, which you gotta imagine, Powell's gonna probably answer some questions about the coronavirus. He's probably going to be answering some questions about, the repo operation. So, if you have any dollar exposure, you got to be a little bit more careful today as a result. For me to chase the euro down here, I tend to, stay away from it, if you will, especially on a day like today. But there's a euro. Like I said, it's pretty oversold. It can be more oversold. We are approaching some support. I think if we do blow through these lows, there's going to be at least a stop run. So that's the one thing that I would be thinking is, oh yeah, we're gonna make a run probably for the 108 and change, and that could be a nice liquidation of the euro through here if we take out 108.80. So that's just something to think about. Cable's still holding up pretty well. I'm looking at the pound as false breakdown right now, but if the euro continues to drift lower and starts taking out stops, it's going to pull the cable the other direction. So just think about that if you're trading the pound. I'm not in the cable right now. I'm just saying it's holding up really well. So if the euro does bounce, the pound's probably going to bounce a little bit better. The Aussies had a nice rally overnight. You notice we're coming up to pretty good trend line resistance. This is a good, if you guys are sellers of the Aussie, you're getting to a good risk reward for shorts. But I'll give you the buts here. The Aussie actually looks better against like the Kiwi. You have equities that are obviously still really well bid. I mean, we're almost at new highs in equities. So the risk is if stocks continue to rally, the Aussie may actually break out to the upside. Now, remember, we closed at 10-year lows. We closed at 10-year lows. I guess that is 10-year lows. Yeah, we closed at 10-year lows just this weekend. And, did we get a false breakdown? Maybe. And I think a move above, the 67, 67.30 would constitute a squeeze in the Aussie. But, I'm a little skeptical with stocks up here. Stocks have to continue to blast higher, which, they might. I mean, you look at the S&P, we're not backing off. We're at all-time highs. I've been hoping and praying for some sort of blow off top in the equity markets. And maybe, what I thought might happen last week with the rally from last week, maybe the dollar yen finally breaks 110 and excuse me, allows for that move in the S&P higher. And I'm hoping that we get dislodged here in the FX market, because the FX market is obviously just, we're just sitting here waiting for something to happen.
The yen should be above 110 by now, don't you think, Blake?
Well, I had the same argument last week, Dale. I mean,
but it pulled back.
Last week I looked at, remember the dollar yen was up there twice, 2 nights in a row. I think it was a week ago Wednesday night, and then Thursday night. Was it? Maybe it was Tuesday. No, it was Wednesday and Thursday night. Wednesday and Thursday we sat up here, up at 110, and I'm like, okay, tonight's the night. Tonight's the night we're gonna break out. And I know it's gonna happen when I'm sleeping. And then, I'm going to get up and we're going to be trading at 110.50, and it didn't happen. Then the next night, same.
Well,
same
during our
situation.
meeting, you said yesterday that the banks were coming in collaring it at 110.
And
buying at 108.
The banks.
The
largest pension fund in the world.
Oh, okay.
Which is the if you guys,
it's the teachers union, and
it's the
CalPERS,
Japanese government pension fund.
Oh, that one. Okay, yeah.
They're the largest pension fund in the world. They're selling 110 and buying 108. So this was their last move right here.
Mm-hmm.
This is their last move, and you guys may not have known that. I don't think I mentioned it on the webinar. I just talked about it in the chat rooms. So if you're a ForexAnalytix subscriber, you heard the conversation why 110 was a big deal. And but the thing is we had a Japanese holiday yesterday, so I was thinking, okay, maybe they're going to blow through the 110 level, but they haven't yet. Excuse me. I'm sorry. I'm just yawning a lot today. So I still think the 110 is a big number. And obviously 109.50 is a big number. And, I've referenced both of these areas, and I think both of these areas, this is your breakout here or here. And what you have to do, in my opinion, is you have to exercise enough patience at this point in time to wait for the breakout. Or, trade the range, sell it at 110, buy it at 109.50, or, wait for the break higher or lower and then take that trade. And that's what I'm waiting to do. I'm waiting to, see what happens here. And I do think the 110 is going to break because of equities, because equities are so dang strong at this point. It seems to me that it's likely that we're going to break higher, but I'm not convinced until I see it. It's kind of like, the old, war cries, don't fire till you see the whites of their eyes. Well, same thing with the dollar yen. Show me that it's breaking out, and I will then at that point in time take action. I'm not fiddle faddling here in this range, because it's very whippy, and frankly, it's just not going the way I thought it'd be going right now, being that stocks are at all-time highs. Why aren't we breaking through 110? I do think it's going to eventually take off, because I still think that stocks have some sort of blow off top that is going to occur, whether we're in the start of it right now or, whether it, happens here in the next couple of days. I still think that equities are going to, continue to rally. So I think that the dollar yen is getting closer to breaking higher. Obviously, if stocks turn lower, then we'll start focusing more at the 109.50. But like I said, I'm letting the market dictate that, not me make the decision on what I think is going to happen without the market confirming it. So, and that's, the difference between, maybe me and you as a trader is you might try to anticipate things. And a lot of times I do too, but when it's this unsure, I let the market drive price action and show me what to do versus me trying to assume. I assumed that we were breaking higher last week. If I would have taken action on that, I would have lost money. I am actually still short from the 109.90s because I have such a good price, but my stops are also really, really close. I've actually considered taking it off just with the assumption that we're going to break higher in the dollar yen, but I'm going to just let the market take me out because I'd rather be proven wrong at this point, versus trying to anticipate. So, that is just because my placement from last week is good. So anyway, that's what I'm looking at with the yen, the Aussie, the Kiwi, the euro. One of the other things that we talked about yesterday during the daily roundup, and I just want you guys to look at this chart just so you kind of have an idea of what I was thinking. This is the daily chart of the dollar index, and what I had drawn yesterday is a potential head and shoulder pattern. Now, why is this a potential head and shoulder pattern? Because if we do stop here, which that would mean that the euro doesn't go much further than 109, and then we create some sort of double bottom in the euro. But that would have to happen in order for what I'm drawing for you right here to take place. The reason why I think this could be a head and shoulder pattern, but I won't really be confirmed until we are down, probably down here. So if we get down below like 98.25, then I would start really pounding the drums as far as a head and shoulder pattern goes. But it might be a complex head and shoulder pattern just because of the neckline being a diagonal line, and the shoulders would fit that as well, roughly. So if we end up forming a top here and not hitting new highs in the dollar index, you've got to be careful of a possible head and shoulder reversal. Again, that's not even my real base case. That's just something that I'm keeping an eye on regarding the dollar, because I don't trade the dollar index per se. I trade all the majors, but I use the dollar index more as a guide for myself. And so when I'm seeing what I'm seeing here, that's one of the things that makes me skeptical about trying to chase the euro lower at this stage in the game. And I did talk about the S&P. Yeah, I did talk about the S&P. Somebody had asked a little earlier, so I'm just going to address it. What do you do with the Kiwi down here? The Kiwi is in no man's land for me. Last week we had this really tight range, and then with the euro breaking down, the Kiwi actually started to follow suit lower. The Kiwi actually looks a little weak here, and you can really see the weakness in the Kiwi due to the strength in the Aussie New Zealand. But also keep in mind that with New Zealand, okay, we have the rate statement later on today. So this rate statement is going to be, it's obviously going to be a bit of a market mover. And so you have to be a little careful trading the Kiwi. Like I don't want any Kiwi exposure going into the RBNZ. And it's the New Zealand has seemed fairly insulated from the coronavirus, but I'm wondering if they're going to start citing the risks of the coronavirus due to their exposure to China. And so, or might actually end up opening the door a little bit for potential negative rates moving forward, like, kind of open that possibility again, like he did mid last year. And so if that's the case, you got to be a little careful with longs down here. Obviously the central bank could actually come out and not reference the coronavirus at all, and then that would be seen actually as more of a bullish development for the Kiwi. So I really don't know what to do with it at this point. And we're in between fibs. So we're in between the 618 and the 78%, retracements, which doesn't give me much reason to be a buyer at this stage in the game. So, or buyer or seller at this stage in the game. I'm not feeling it, if you will. So I hope that overview kind of helps you out a little bit. Remember, we do have the Humphrey Hawkins testimony today, and I will be with you 4 hours from now with the daily roundup webinar, and am giving you an overview of kind of what's happened with the FX market. Watch out, the euro is actually testing the 109 level right now. So with that being said, I'm going to pass it over to my colleagues, Steve and Stelios and Dale. And good morning, guys.
Good morning, everybody.
Good morning, sunshine.
Good morning, sunshine. Yeah.
Yeah.
And by the way, Dale, today we've got your heavy rains that you had yesterday.
Oh yeah,
we got them.
yeah.
They made their way.
I'm
from
your
California
weatherman, Blake. I'll always let you know what your weather's the next day. Thank
you. Thanks for giving me the heads up. Because
I'm strategically located for that.
All right. Well, guys, have a great day. Remember, if you haven't tried out ForexAnalytix, it's a perfect time to do so. It's $1 for 10 days to try it out. Make sure you download the app when you do it, and visit our webinar sponsors, Forest Park FX, when you can. So thanks, everybody. I'm going to pass it over to you guys.
Good hunting, bro.
Thanks.
Blake.
See you guys.
Good morning, guys. How are you?
Hey, Sel.
Good
Steve.
morning.
Hey. Lovely weather here in Athens. Glorious sunshine and high temperatures, so it's good.
Spring's early.
Yeah, maybe.
I don't think it's here yet. It's just a few good days. I mean, but
Okay.
yeah, we're getting closer.
You have to be
Yeah.
even a contrarian on the weather.
All right.
The glass is half empty, even on the weather.
All right. I don't see any numbers out of the US in 2 minutes, so we don't have any pressure to go to that. Okay. Right. What have we got? Clearly, the main story is still the coronavirus. Markets seem to still not pay too much attention to it. Equity markets, that is. For people who haven't been following it too closely, the death toll is now above 1,000. If we believe the statistics that they're giving us, there was a comment some minutes ago from. It says the Communist Party boss of China's Huangguang, whatever region that is, says that the coronavirus situation in the city is still very severe. So we're kind of getting mixed signals. I hope that I'm wrong when I say that I think the real numbers are not being reported. I really do hope I'm wrong, but it's not something we can dismiss, that's for sure. And the markets seem to be.
Do the Chinese ever report any real numbers when it's something unpleasant?
Yeah, that's a good question. Data-wise, we had some numbers out of Australia. Home loans better than expected. Business confidence worse than expected. Overall, not that much. We did have some interesting numbers from the UK.
Bad manufacturing data, right?
Yes, but GDP was better than expected. So year on year now, it's 1.1%. Quarter on quarter, it's still at flat, but slight improvement in month on month and year on year basis. But industrial production, manufacturing production, still worse than expected, and it kind of makes sense with everything that's surrounding Brexit. And still, we do have Brexit now, but we don't know what the details are going to be in terms of trade balance, deals, etc. So this is still weighing on the UK economy and on leading indicators, and for sure it's going to weigh on it for months and months to come. But overall, if you take into account PMIs from last week and all the numbers, it's not terrible. Let's leave it at that. It's not that the economy is not really growing much, but it's not terrible. So given all the circumstances, I think the UK is kind of hobbling along, trying to make it through this admittedly very difficult period. What else did we have? We have Humphrey Hawkins, like Blake said. Now, the interesting thing is that how should I put it? The text has been released of the testimony. Obviously, there's I don't know if there's going to be something more than that, but basically they have Jerome Powell is kind of opening the door to rate cuts, because he will mention the coronavirus and how it's a new risk to the outlook.
Yeah, it's the new 16th mandate of the Fed, fighting infections and diseases.
But
they started with price stability. They've now assumed another like 12 roles. Every single one of them has to do with bailing out politicians. And the only actual mandate that they've completely abandoned is price stability. Makes sense.
Yeah, but you have to admit that this will have an effect on global trade, the global economy, and the U.S. economy in particular as well. So it's going to affect their mandate on price stability. Inflation theoretically is going to affect that. So he kind of has the obligation of mentioning it. So what else is happening? That is probably it for now, I think.
Anyhow, there is no question that the next move from the Fed is going to be lower. I mean, we said that, I don't know what the trigger is going to be, but, I think they've made it more than clear that, they're not going to be hiking no matter what. So, it's staying where we are until we move lower in rates.
Yeah, and the market agrees with you. We're pricing one full cut before the end of the year by November. So, and that's been pretty constant.
That's a good case scenario.
Yeah, it's. I think it's relatively fairly priced, and if you put a gun to my head, I think they're probably going to come earlier. But I think one before year end is probably right. So,
if things go smoothly, because if things start unraveling, then it's going to be,
oh yeah,
consecutive rate cuts.
Yeah.
Well, as our friend Peter Bookvar says, the Fed is not data dependent; they're S&P dependent. So they're probably keeping it in their pocket for some type of correction in the market and pull it out there.
God forbid! Imagine if we see like a 5% move lower.
Yeah, the last one was about 4, right? 3 or 4.
Yeah.
Yeah, I think they'll pull it out with a 10% correction. Don't you?
What, sorry?
I don't think they'll wait that much.
Yeah, I mean, if it happens in our lifetime, I think. Anyway.
Yeah.
Through capitalism.
Yeah, if the plunge protection team can't hold the market on a certain correction, that's when they'll do it.
Yeah, we have the most messed up market environment probably ever. I mean, we've inverted the pyramid in almost everything. Imagine, Dale, you are an old trader, investor.
Yeah,
Imagine that for decades people were buying bonds to get a return, a yield, right?
Yeah.
And they were buying stocks to get price appreciation. Now people are actually buying stocks to get a yield, and they're buying bonds to get price appreciation. I mean, everything has been inverted.
I remember talking about that when I was having lunch with Jesse Livermore.
Back in your days.
He called you old, Dale. I'm not going to forget that.
You were actually his mentor.
Yeah, he caught depression from me. All right. Anyway.
Okay.
Anyway, looking at S&Ps, do you remember what Greg had for possible upside target before the correction? I think it was in the 70s.
Yeah, I think it was in the 70s as well. The 71 is 13371 is the 127% extension of this little correction, and then the next upside is the 161.8 of that one, which comes at 3414. Nasdaq today actually yesterday reached my target, which was the 161.8% extension of this triangle's range.
And look at Steve's chart on the bottom, everybody. That red line on the RSI.
Oh yeah, big divergence here in the RSI. Big. I mean, previous reading was
how much longer it could ignore
like at 82, and we now have an RSI at 70. So from 82 to 70, and you know we've actually moved substantially higher. So I'm pretty sure that the next correction lower is going to come without invalidating this RSI divergence, because as you mentioned, it's quite profound. So you know I'm looking at these prices in Nasdaq as a possible pullback, area. And as I said, the two areas I'm looking in the S&P is the 3371 and then 3414. Now, you know, even if you look at, you know, the market moving stocks, some of them have completely gone parabolic, with Microsoft being the most extreme case, following, of course, the nut move from Tesla, because Microsoft, believe it or not, Dale, has gained 18% in 11 trading days. And that is after already having produced this type of a move. So, you know, there are no upside targets anymore. I mean, I've exceeded all the possible upside targets. So it's just, you know, monitoring this vertical move and seeing where it can, you know, possibly top out. So, you know, we already had like the crazy move from Tesla, which has already, you know, blown up in an extent. I mean, we've moved substantially lower, and by looking at the chart, I do think that Tesla is probably going to move even lower from here. I mean, it topped out there at 970. We're currently trading $150 lower, and I think it's quite likely to see, you know, big move to the downside following this. Apple is also like, it hasn't produced that last parabolic move that Microsoft has, but it's, you know,
it looks heavy to me.
That's one interpretation. Another one is that this is likely a triangle.
Okay.
So that might produce one more move like this before we see, you know, some type of a correction. Don't forget that if you zoom out, this has been right. I mean,
like everything.
Yeah, I mean, January 2019, so like 13 months ago. Since then, we've produced a 113% return. I mean, what else can you say about that? So yeah, it's like, you know,
we're partying like it's 1999.
Exactly, we're partying like it's 1999. Exactly as you said it. So it is what it is, and you know, keep monitoring until, you know, something changes. Of course, you know, they don't want anything to change, but at some point, something is going to be ground shaking enough, you know, for things to start moving. Now, going to the questions, we have a question of what's happening here with the pound. You know, there were two scenarios here with the pound. One of them was that, you know, we would break out from this triangle and move higher. The other one was that this triangle was, you know, B. So I said that if that was the case, which, you know, we've broken below it, I would expect a move towards like 127, 127.50 before seeing continuation higher. So, you know, this is the scenario I'm looking for. A move towards the 200 daily moving average, or perhaps even a little bit higher. We have another confluence of supports a little bit higher, closer to 127.50. And then we can expect perhaps a continuation higher. So that's what I'm looking for in the pound. So in the short term, I'm expecting more weakness here in the pound. But, you know, I still believe that, you know, further upside is likely following, you know, a move towards these areas that I already indicated. Now, having to do with the euro is clearly in the defensive. It yesterday completed the head and shoulders formation that we had indicated up there. About to retest the multi-year lows, which are at 1.08837. So clearly it remains heavy. Now, as I've said multiple times, would I be selling Euro USD just because it's in a downtrend? The answer is no, I wouldn't. And the reason is because we've been in a prolonged downtrend and we've managed to produce less than 8% return in 1.5 years. So, it remains in a downtrend, but I don't think there is any real reason to participate in this. I still think that the next big move, whenever we have some kind of a sharp move, is going to be to the upside. Even if it happens from, lower levels, I don't want to be, short to collect pennies ahead of a probable dollar implosion. So I'd rather let other people being short Euro USD for the time being. I just have no position. I haven't had any position here for the past 1.5 years, and I think it's the best thing I could have done. I'd rather be trading other stuff that actually move more decently than this one. Now, Blake already mentioned the Aussie, but I wanted to indicate here that despite being in a clear downtrend and testing multi-year lows, I'm really not inspired by this downside momentum, so I would refrain from chasing the Aussie to the downside after this move that began above 70 cents. You can already see here the RSI divergence. So I think that if you really want to be short the Aussie or the Kiwi, you'd rather wait for some type of a rebound from here or from a little bit lower and get better prices to be short, either in the case of the Aussie or in the case of the Kiwi. You can see it here. Both of them clearly under pressure, and I do like the possibility for more downside, but as I said, not from current levels. So, my bias is still bearish, but, in my opinion, don't sell down here. As simple as that. And, if you're looking for opportunities to be short, as I've said multiple times, the Aussie against the yen and the Kiwi against the yen probably will be, better shorts once we see some risk off in the market, which, shouldn't take that long, at least to see some type of a correction lower. So, anything like that, probably a nice opportunity to be short. Now, Apple and Microsoft are making up a third of the Dow Jones Index. Yes, and actually, this is also, if you look at the metrics, this is also one sign that we usually see near, bull market tops, when fewer and fewer stocks concentrate so much of the weight of the big indices. Usually, that is also a topping sign. And we've seen that happening in an unprecedented way. So you see that roughly 5-6 companies can move on their own the market one way or another, and they've made up a big part of the rallies we've seen. And usually when you see so much concentration in a few companies, that happens in big market swings. Blues line pretty okay. That was referring probably to a chart I didn't join since the beginning, so probably something that Blake or Dale was showing. Gold is going up like a rocket. Not exactly, not today. I mean, gold has been recently in a consolidation, but yeah, I do think that from a fundamental perspective, there is no alternative to gold going higher in the years ahead, because one way or another, with monetary policy being what it is, and especially if we see any risks coming through to the financial system, I mean, one way or another, gold should be moving higher. The path of least resistance is definitely higher. Now, we've spent a period of consolidation here, but to me it looks like a triangle, and that would imply that any type of move above this triangle's resistance should open up the next upside target, which is at 1625. Okay, the 161.8% extension of that correction lower. And if we assume that this triangle proves to be the formation we have at hand, then we can also fib extend this one, which would give us 2 more upside targets, being, let's see, 1632 and 1658. So these are potential upside targets for gold once it breaks out from this triangle. And I think that it can prove rather easy for the market to fulfill those upside targets. I mean, we've seen that when gold really starts moving, it can really move. I mean, it can really produce like a $30 move within a couple of days without breaking a sweat. So that's what I think about gold, and having to do with silver, one and the same. By the way, silver suffered another like flash crash today. For some reason, we keep seeing these type of moves in gold and mostly in silver, and coincidentally, quote unquote, coincidentally, all those flash moves are happening to the downside. Just within the last like 15 trading days, we've had 3 of those. One of them, January the 20th, one of them, January 29th, a third of them today. And, soon after this happens, the market completely recovers this move lower. So, clearly taking out stops or whatever they're doing, this is not normal market behavior. I mean, somebody would say, okay, somebody sold a big quantity, of gold or silver in this case, but nobody that wants to actually sell something and get a decent price out of it would do it like that. So, this is not an investor doing something that makes sense, because that's the easiest way for you to lose money. If you want to get rid of a specific quantity, what you're going to do is, you're going to do it, within a day. You're going to do it like within, a couple of days, and you're not going to be doing it during liquid hours just by, getting rid of it, in one off.
Yeah, it always happens outside of regular COMEX hours.
Yeah.
You think it's spoofing? Is that what spoofing is? Like they pull all the bids just so they could get a good price? Is that what spoofing is?
That is a likely interpretation. But let's agree to that. It's not normal trading behavior. So whatever it is, whatever they're doing, it's abnormal.
And it even happens more in silver than gold.
Oh yeah, a lot more in silver than gold.
Yeah. Okay.
A lot more in silver and gold. So it's one of the reasons why, if you want to be buying, in the market, if you want to be long silver or whatever, I would advocate that when you're doing your risk reward calculation, you should be taking into account that you should have, rather large stops, because you see what can happen there, right? I mean, you can have like you can have like, the right thesis about what you want to be doing here.
Right, the market wrong the trade because of that.
Yeah, and then wake up one day and find yourself being stopped out for a move that lasted like 60 seconds. And then you're going to be out of your position at the worst possible price, just because the market collapsed within 1 minute, and then within like an hour it had recovered completely.
Those Ganefs.
Yeah, that's sell-off.
You know what a Ganef is?
I'm assuming.
Huh?
I'm assuming.
A crook.
Yeah.
It's Yiddish.
So what doesn't change here, though, despite all these spikes lower, is the fact that once we take out this formation, which is, in my opinion, clearly corrective, you should be looking for for a move like above 18.5 towards 19 again at the very least. Now, can we first see another move lower within this formation and then that move higher? Yeah, sure, we can. I mean, I'm not saying we can't, but I'm saying that, you know, one way or another, I have no reason to change my bullish bias. Now, having to do with crude seems to be consolidating here, but I have to admit that so far, this consolidation doesn't look bullish to me in any way. So it can end up being some type of a triangle, something like this. That's one alternative. Another alternative, we might see like, you know, some type of a flag being built here. So, you know, crude might remain a little bit stuck for a few more days or like a week or so. But I do think that the path of least resistance remains lower. So as long as we trade below like 55, I think that any rebound is probably best to be sold. I don't see anything bullish with this formation. Now, Palladium, by the way, probably the triangles interpretation is the most likely one here as well. So, you know, you can either trade this range or wait for a breakout, which, you know, might be to the upside, you know, given the fact that we're just consolidating here. Let me see. Crude, we covered that. USD yen, gold we covered. We can have a look at USD yen. Pound yen, sure, let's have a look at pound yen. So, pound against the yen, here it is. This looks like a triangle to me so far. So, first thing I have to say here is that usually, you know, a triangle is a formation that should break in the direction of the previous trend. So that would likely point higher. But, you know, if you get alternatively a move to the downside, that's also going to be a technical development. You can even see here that the RSI has completely flatlined. So that's another indication that, you know, the pair is coiling, and, you know, most likely when we do see a breakout from this tightening formation, we're going to see some type of an acceleration higher or lower. So until that happens, I think that you shouldn't be doing anything with the pound yen. Now, having to do with the other question, which is about the USD yen, nothing has really changed here as well, which is, you know, and, you know, we can describe it very simply by saying we are still testing and failing to break above multi-year trendline resistance. And as long as that's the case, the risk reward can only make sense if you want to be short, right? Because, you know, buying on top of a multi-year trendline resistance that, you know, has managed to keep price below it by rejecting again and again, you know, any attempt to break above it makes no sense. So you have two positions you can be in here. One, having no position, and the second one being short. Now, if we do break out from this descending trend line resistance and we confirm by staying a couple of days above it, then yeah, I think it makes all the sense in the world for you to be looking, you know, for higher prices. But until that happens, you're either short or neutral, in my opinion. Peter is asking, are we on today? Is that your guest, Dale? Peter Campbell?
No,
Okay.
not today's guest.
Oh, perhaps he has confused the dates then?
Yeah, Peter, I think I just booked him for the end of the month, the end of March. Peter at MCM_CT. Yeah, Peter. That's March 31st if you look at the tweet.
Okay. Okay. So I see we have Brent today, right?
Yes.
Okay.
And he's here.
Okay, cool.
I'm already in April.
He says he got the date wrong.
Okay. People
no
ask me when I say next open date's in April, they go, Dale, I might be dead by then. Yeah, we all could be, but we have to
We
plan
all
for the
could be dead
future.
by then.
Anyway,
Yeah,
it's okay,
true.
buddy.
True.
All right.
Okay. So market has kept me busy, so I lose track of certain types of things. Oh yeah, I bet the market has kept you busy. I mean, the market is perfect in keeping us busy. That's the only certain thing. So, oh, by the way, one thing to mention here, the Aussie Kiwi has actually managed to pull some nice rebound from the trend line support. So it has now broken above this trend line resistance, and that actually opens up the upside. So actually Aussie Kiwi was looking very, very weak, especially when it was testing for multiple days that channel's support being unable to rebound. I started thinking that it's going to collapse, and then it managed to pull itself higher, and it seems to be making a move here. So at the very least, I would be expecting, okay, at the very least, I would be expecting an extension of this range to the upside, which would imply a move towards like 106 currently. So until we see that move playing out, I think that the Aussie might keep overperforming the Kiwi. Of course, this pair rarely moves aggressively, so I'm not really expecting fireworks, but it is what it is. Our pleasure, Shahab. I think Kiwi Yen is in a very interesting and pivotal place ahead of tonight's RBNZ. Worth a look, maybe. Yeah, I did have a look, and I do agree with you. Let's have a look at it again. So I agree with you because this trend line support was resistance in the past. It's also the 50% fib. So I do agree with you. This is a good support area. So from a risk reward perspective, if you want to be long the Kiwi Yen, it makes sense because you can risk just like, I don't know, like 20, 30 pips. And we might get like a bigger rebound from there. But if we do slice through it today, I think that it's going to directly keep moving lower. So I do agree with you. This is an interesting pivot in the market, the 69.90 area, let's say. But nobody says that we can't actually rebound again from it ahead of the RBNZ. Okay, Dale, if your guest is here, I think I've covered all the questions.
Okay, thank you, Steve.
Euro Swiss resting wedge. Okay, one last that I hadn't seen actually. Fast overview of a few of the Euro pairs, and I'm going to go briefly through them. So the one was Euro Aussie. Euro Aussie. So the Euro Aussie. Nice rejection from the previous resistance area, and we never completed this inverted head and shoulders formation, and we're now moving again towards multiple support. So it's a nice confluence of supports at 162, 50 DMA, 200 DMA, and the 61.8% fib. So watch out for that area. Don't forget that in the grand scheme of things, we remain more or less in the middle of this ascending channel. So 61.8, 162 might provide support. Euro Kiwi in the middle of this symmetrical triangle. So, testing the 200 daily moving average as resistance. A breakout from this little flag might move us to the upside. Personally, I wouldn't be doing anything because, as I said, we're exactly in the middle of a symmetrical triangle. So, price action here is just coiling over time. So, and having to do with the question about the Euro Swiss is actually testing the lows once again. And, there is nothing bullish here. I said the other day that, if you want to be bullish the Euro Swiss, you should at the very least look for a move above this little resistance area here at 1073. Unless that happens, then we might take out, the support area at 166 and continue lower. And we're currently testing that support area at 166. So until proven otherwise, you have to respect the downside. Okay, there is some substantial RSI divergence, and this area might act as support once again, but don't bet on that. Thanks, Dale.
You're welcome, buddy. Okay. Brent, I want to welcome you to our community, and I'm going to get you set up now, buddy. I may have, it's Brent. Your last name, Brent, I may have made the wrong Brent, the panelist. Is it Brent Baraducci or Brent Carlisle? Brent Carlisle I had on last week, right? Yeah. So I think it's Brent Baraducci.
I wouldn't have imagined that Brent is such a popular name, actually.
Yeah, okay, so let me just go. Okay, Brent. Everyone wants to be named after crude oil.
Yeah. Can
Brent
I be named
Crude.
Gold?
I'm just WTI. So
Can I be named Gold, please?
You are Goldstein. Steve
Goldfinger.
Goldstein. Okay, so okay, Brent. Welcome to Face, Brent.
Good morning. Nice to be with you.
All right, so I had a little confusion. Some of our guests, after they see our stuff, like attending our show. So you can share your screen by looking for a little green box. It'll say share.
Okay.
And then you just select the screen you want to show, and we can start.
Well, where would you like to start, Dale? You had mentioned you wanted a little bit of background information.
Yeah,
first.
do you want to share your screen first, Brent?
Sure.
Do you have a screen to share? It's a little green box on the drop-down menu.
Yep, got it right there. How's
okay,
that?
Beautiful, beautiful. All right, so first of all, I'm just taking a guess. Black Lion CTA, is it because the background of your charts are black? That you
No,
came
actually,
up with that handle?
No, Black Lion was the nickname of one of the favorite fighter squadrons that I served in the United States Navy.
Yeah, I was reading about that. Looks like you flew everything.
I flew some great platforms. I started out I spent a year as an A4 instructor after I got my wings. Then I was assigned to NAS Miramar, where I flew the F-14 first with Fighter Squadron 111, and then Fighter Squadron 213 that was the Black Lions. And then I had a great opportunity and did an Air Force exchange tour and flew with the United States Air Force for 2.5 years, where I got to fly brand new F-16 Block 50s.
So tell me how a pilot, someone, that really had, and I think it takes a lot of courage and concentration, and I'm thinking about how your skills as a pilot might translate into flying in the markets. Why don't you tell us how that training may have given you an edge in coming into this business?
Well, where I think it gave me an edge, Dale, was, and I agree, there is an edge there, particularly in the futures markets. I think there's two things. One is the ability to compartmentalize, the ability to turn everything off. I mean, when you're in the airplane, if you're trying to land aboard a ship or you're over Iraq or whatever the case may be, you can't be thinking about what's going on back home, what's for dinner back on the ship. You've got to be able to concentrate and focus on the task at hand. That's certainly very helpful. I think the other thing is just being able to deal with the reality of the way things are and not necessarily the way you want them. 300-400 miles inside Iraq, or flying a combat air patrol somewhere else, you don't get the engagement that you hoped for. You got to deal with the engagement that's in front of you. But I think the most important thing,
you learn to adapt to what the situation is, and you're always reassessing, aren't you?
Constantly, and it'd be a lot easier to say, well, gosh, I wish this would break out, or I wish that would break down, or do something, or I wish this would test a certain level.
I use a magnet on the screen sometimes, Brent, to try and drag the candle up or down.
How's that working for you, Dale?
Well, the course is $999.99. So how did it happen for you? Were you trading while you were in the Navy as a fighter pilot, or did it happen afterwards?
Mostly afterwards. I wasn't actively trading when I was in the Navy. I had a broker. I was stashing money away as fast and hard as I possibly could. This was the 90s, so okay. My broker and I were bull market geniuses all the way up till 98, 99. Right. But just fell in love with markets, fell in love with analysis, fell in love with, reading. He'd send me everything on every IPO and loved reading it and just trying to find an edge. And it really started while I was flying. I can remember when we would deploy for 6 months, guys would be, getting Sports Illustrated subscriptions or whatever. And I'd be showing up with boxes of, with stuff like Graham and Dodd security analysis and Larry McMillan's books on options and anything with a workbook to try to learn and get better.
Okay. Let me ask you, were any of the books or even live mentors influential to, the process that you're currently using, or helped you break through and give you a new paradigm?
Yeah, definitely. I mean, in the early years, I was just all about learn the technical aspects of the business, learn, what all the contract specifications were, learn all the technical analysis, learn all the options Greeks. I thought that if I had all the technical knowledge, I would be successful, and it's helpful. I think that's required, but I don't think that's ultimately what completed the package. Recently, in the last year, I've switched over to reading more about psychology, neuroscience, and physiology. John Coates' book, The Hour Between Dog and Wolf, recently completed Brett Steenbarger's Volume 2, phenomenal book. Michael Martin's The Inner Voice of Trading. So kind of focusing more on less about the hard skills and more on the soft skills and the psychology of it.
It's all in our head, isn't it?
Indeed, and I'll be very honest with you, Dale. I did not pay enough attention to that early on, to my detriment.
Okay, so there are a lot of things. There's FOMO. The waiting is the hardest part. Being in a winning position and getting out early, first daylight syndrome, and then watching windfalls occur. Tell us about what were some of your, I'm better at entries and exits. So we all have our strengths and weaknesses that we bring to the table. What have you really worked on that has made you more effective?
Well, I think going back to kind of the Navy days, like I am very good at cutting my losses. If I put a position on and the position doesn't work, I'm out. And if I get nicked up for a loss, I do that. That is a strength of mine. Okay. Whereas my key weakness is seeing some big move in the market and I'm not participating in it, and the frustration of missing out, the fear of missing out. That I have really had to consciously work on sitting on my hands, just saying, okay, you missed an opportunity, and wait around for the next one, and not try to jump in the the middle of something extended. I thought one of your panelists in your earlier session had a great comment about the euro dollar cross rate. I think his comment was fabulous. He said, look, this thing's in a downtrend. There haven't been any rallies to sell. And he goes, my technique is I'm not going to sell something that's gone straight down. And that takes tremendous discipline, because you're sitting there the entire time saying, well, if I would have shorted this up at whatever, fill the blank in, my account would be hugely profitable. And now you've got to stand by. So I thought one of your panelists, and my apologies for getting the gentleman's name, but I thought that was a great comment.
Yeah. So, I teach people about the key word, I think, for most traders is next, and even have people write down, Brent, I will always miss trades, and that's okay, because there's always another one around the corner. And it kind of takes some of the pressure off people that succumb to FOMO. There's always another trade. There's always another great opportunity. And why not admit what happens every day? I miss trades every day. So why is today any different? I'm going to miss some trades. But it's okay because there's always another one around the corner, right, buddy?
Absolutely. And I'll tell you one technique that I have instituted that has helped me tremendously. And Dale, your words are so good. I hope that people that are joining your webinars are really taking this on board. All I can tell them is somebody that's been doing this for a decade that you're speaking the gospel here. But one of the things that's helped me is I've started doing, I log almost all of my trades and do an after action report at the end of every month.
You journal.
Absolutely. But this was one that Brett Steenbarger really hit home for me is if a trade, if all of a sudden there's a big move in a commodity or an index or something, and I'm not a part of it, is I will go back and log what happened and what I missed. And that's been so helpful for me, Dale, because even though I might not be taking a profit out of that trade, and in increasing, my account, what I am doing is taking out some knowledge and seeing some patterns and seeing some setups that will hopefully benefit me down the road. So I'm profiting intellectually, not necessarily monetarily. And that has helped a great deal.
Yeah, it's psychological capital.
Absolutely. And that counts huge.
Yeah. So I'd be interested in, I know you're a CTA, and I went to your website, very nice website, and I'm going to ask you to show it in a little while. So you have some things up here on the grid, different charts with different indicators. So why don't you tell us what's on your radar and what you're thinking with the market structure we're currently faced with?
Well, Dale, what I'd like to do is extend a thought that you began in your earlier session. You had mentioned gold, and gold and all of the metals are trading. They trade very emotionally. Let's just be realistic. Gold especially has more emotion behind it than most commodities out there, and people will get wrapped up in the emotion. There's so many people that, the fiat currency is all going to fail. It's going to go to zero. You got to be long gold with both hands or long any kind of precious metal. And I think that whenever you let that emotion cloud your judgment, then you'll start to put the analytics aside. So what I wanted to do this morning was I thought it'd be kind of helpful to dovetail on what you said earlier, and I want to take a look at platinum. And this is a market it's been a pretty hot market. And one of the reasons is it has a lot of correlation to palladium, which I call that's the Tesla of commodities. And here's a quick chart of palladium. You can see, literally since the middle of 2019, it's just been an exponential rise. A lot of people going, we need palladium for more environmentally sensitive catalytic converters and everything. So it's just driven this thing nuts. Where people have forgot to go and do their analysis is palladium is a very thinly traded commodity. I think the open interest in this thing on any given week's about 26,000 contracts, and it just doesn't take much to knock around a commodity when you have such a thin float. So platinum has definitely been drug up kind of in sympathy with palladium, but I think that's a run that's over. So what I thought we'd take a look at here is we'll take a look at the market structure for platinum. Top pane here, this is just weekly price data of platinum. So nothing exciting there. I'm a big fan of using the Ichimoku technique for a lot of reasons. Then in the green here, what this is these are the commercial long positions from the commitment of traders.
You have COT that it's real time. It updates real time or every week.
This is every week, and I use the futures, and I use the historical combined data of futures and options. So this includes futures and options. So green are the commercial long positions, red are the commercial short positions, and we take long minus short, and we get a net position in the bottom pane. So what I'm looking at here in the bottom pane is the commercials. If you go back here 3 weeks ago, that was an all-time record net short for commercials. So this tells you the people that are actually dealing in platinum, whether they're producing it or using it in catalytic converters or whatever, they think they are hedging themselves for a decline, and you can see that's been realized. Or been starting to be realized. I think it's got farther to go. Something else.
You ever find? I used to follow COT religiously, and you always want to be on the side of the commercials and fade small specs or even large specs. Have you noticed that the commercials have deeper pockets than we do, and that they're at times very early. Like right now in gold, they have close to record shorts on in gold for quite some time, even, with gold strength, and they maintain it. So is it still price action, and the COT just gives you a bias?
The COT gives me a bias. This
Okay.
tells me, and this also too helps with the, oh my gosh, I haven't been in platinum. It's had this huge run from 880 to up over 1,000. It's like, stop, stand back. This run is a lot closer to the end than it is.
I'm so old. I remember when platinum was 2,000 and palladium was $50.
Sure. Yeah.
So maybe we're going to revert to the mean the other way. I mean, one of my associates, Steve Balgi, looks at those kind of spreads, platinum, palladium, that type of thing. So perhaps palladium's overvalued and platinum's undervalued on the spread. What do you think?
I don't trade those spreads, so I will definitely defer to the gentleman on your team. But
Okay.
I love the thinking, and that's something I commend him for his ingenuity in that regard.
Okay.
And then
So-
here we're
go
looking at the specs. Record long position, record net long, and what this tells me is we're running out of people to buy this. We're running out of the fuel that's going to take it higher. So it's just
Okay.
not a time to be long. And then
Okay.
the last thing that I look at is come over here. Now this is daily data in the top pane, and then in the bottom pane, this is the 10-year weighted average of annual seasonality. If you go back and look every year from December into January and early February, you get a nice run up in all the metals. Platinum certainly benefits from that, but that begins to wane here toward the second half of February. So you've got a situation where the speculators have extended this about as far as they can, and you're starting to run out of seasonals. So I think this has been a good short setup. And the one thing just you can take a quick look at, and this is just a very basic chart. This is daily data on a candlestick chart. Anytime you see a nice breakout like this, we came up, we took out resistance, and this immediately goes into distribution and fails. That tells me from years of doing this that the run is over. The trade now is to the short
people
side.
wrong-footed on false breakouts and breakdowns.
100% constantly. So there's a lot of people here that, oh my gosh, it's breaking out. I'm going long. I'm going to ride this up to new highs. And you can see the commercials told you where they were, and the speculators were out of ammunition to drive this any higher, and it just got sold into.
We're getting a request. I don't know if you're prepped for it, but Forex Gal's asking if you could show your gold chart.
Absolutely. Let me load that. Do you want to look at the commitment of traders, or?
Yeah, I mean, what you've been looking at
Okay.
comparatively to platinum and so forth. What you're viewing.
Well, it's going to look a whole lot like what we just talked about and what you
Okay.
mentioned in your earlier session, Dale.
Also, Brent, going back to when I used to update my charts by hand, I remember there being something that's interesting that reminded me of it when you were talking about February, that there was a classic kind of repetitive cycle of a February break in commodity prices. And a lot of important highs in gold were made in February. So just something I remembered way back in my cobwebs.
Yeah, so this is what we're looking at here. This is the exact same structure. Top pane is gold. This is weekly price data. The green are the commercial long positions. Red are the commercial short positions. We take the long minus the short, and we get a net position. And you can see they've really been kind of hugging down here near record short from the commercials. And you can also see we're extended well above the clouds. The clouds are very wide. There's nothing about this that says that the risk reward is biased to go higher.
Now I know why you went with Ichimoku. Being a pilot, flying through the clouds, and now you have the clouds to fly your charts on.
Well, and
or
then
through, huh?
Yep, and then we'll come over here to the speculators, and you begin to see a little bit of divergence because you saw gold. We had the breakout on the Iran action up here, so we had some new highs. But if you come down here and look at the net positions, and it's very hard to see, Dale. If you come over here, we were net 364, 698. At the next high, we're net 351. Now we're 354. So we're beginning to see some divergence. We're seeing price going higher without the speculators falling through to push this higher. So again, I think we've got a similar setup like platinum. And when you come over here to gold and look at its seasonal chart, just like you said, Dale, you nailed it. You come here to the middle of February and this thing just begins to fall off. And I've kind of drawn the green lines in here. Hey, here's where seasonal strength starts. Here's where it ends. It's moving sideways, and the speculators are running out of ammunition to drive this higher.
Okay, really interesting stuff that you do here, Brent. Any other instruments that you wanted to talk about?
No, I thought I didn't want to take up too much of your time.
Okay.
I'd say most of my trading, my first job out of the Navy was actually running an exploration and production company. So I spend a lot of time and energy, but I thought since you did such a nice job covering, mentioning metals in your morning show that we'd just kind of leverage that today.
Okay. Someone's asking if you follow Jake Bernstein. He was a real seasonal guy. He's one of the pioneers in seasonality.
I do not.
Okay. Why don't you, this be a good time to show your website, Brent, if so people know how to get a hold of you.
Sure, and there's some resources that folks may be able to. Real simple, Black Lion, if I can spell it. So there it is, and what some folks may find interesting, if you come over here to the blog, every week I do a report based on the EIA's. We do the petroleum report typically on Wednesday, natural gas on Thursday, unless petroleum gets delayed for holidays. And every once in a while, I'll drop in some stuff. I had a report out there about sugar back on the 25th of January. I'll tell you honestly, that one's not looking too great. I've been stopped out of that, but that's okay. That happens, Dale. That's why we use protected. What we're trying to do here is generate trading ideas, and then you've got to manage your risk. That's just a part of trading. The
difference between pros and amateurs are pros know how to lose, so they have money left to be right with.
Absolutely, and then so you can.
You ever blow out an account, Brent?
Oh yes.
Okay, good. All right. Okay, welcome to the club.
Yeah, there's those that have and those that will. I think I'll be honest with you, Dale. The worst thing that happened to me. I'd never traded futures until 2009. Started studying them, and studied watching the charts, and I decided. And one day I said, "Man, heating oil looks terrible." This is back when HO really was, New York Harbor heating oil, not ultra low sulfur distillates like it is now. So I looked at this chart, and I'm going to be very honest with you and our guest today, Dale. I didn't know near as much as what I thought. So I shorted heating oil. I get up the next morning, and heating oil has fallen apart. And I thought that I have printed money. I'm like in my closet picking out my suit for the picture that's going to be on the cover of the Wall Street Journal, because I just had the world by the butt now.
Right.
So the worst thing I think could ever happen is to go out and have your first trade win big, because
that's a superstition on the floor.
Yeah, because if a little is good, more is better.
Yeah.
And
Okay.
so we know where that leads.
So you use max leverage.
Oh yeah.
Yeah.
So,
all right. I'm getting a question just quickly. You have any overview on this melt up in S&Ps, and just wondering if you have a view of this and maybe what your thoughts are on this blow off melt up.
I will. Right now, I am strictly day trading equities only. I'm not holding positions.
Okay.
Just because I think that right here, Dale, the risk reward is balanced. You're about as likely to go up as you are to go down, and I think the magnitude is similar. Probably a little more risk to the downside. I have tried to short intraday a couple of times and been extremely frustrated. The bid underneath the market is it's legitimate, it's real. I will share with you, I'm based in Dallas. We've got a lot of large family offices here in Dallas that I interface with, a couple of them that I visit regularly with. In fact, one just last Friday. This is a guy who's been managing money since before I started flying jets. Very astute money manager, incredibly frustrated. He goes, I'm 50% in cash. He goes, I cannot commit more money at these levels. You know, I'm
Yeah.
not a prudent risk manager, but yeah, I'm having to sit here and watch this go up every day. And every time, because you would think something like coronavirus would have knocked us back, you know, 4 or 5%, would have set up some entries, and he's like, nothing. So there's a lot of folks, not just you and I, that are frustrated by this.
How about the reverse with oil being under pressure at key support? You think 50 is going to hold, or we're going to take it out? And do you see at least a bear market rally developing in oil? All you Texas guys love the energy market.
I've got to go with the charts are telling me that we've got targets, intraday targets down to about 48.5. I don't think we're going to have a huge bear market, but I'm not seeing the divergence that tells me that this is a bottom in oil right here.
Okay.
I think we get another leg down, but it's not, you know, I'm not ready to start calling $26 oil yet either.
Okay. How about 33?
33. Actually, I have a target in the 30s, Dale.
All right. So, Brent, you are a CTA, and I read your minimum account size is 100K.
Yes, sir.
Okay. Any other services that you provide for people that aren't as liquid as that?
I have worked with some upstream producers and some folks that get royalty income on some hedging programs. You know, some smaller scale stuff.
Okay.
Have made some proposals to banks that have never gone anywhere, but but I'll definitely sit and talk with people on how they can hedge their exposure in certain situations like that.
Okay. Well, you know, you survived an interview with me, buddy. You're now my trading warrior brother. You're a warrior anyway. So really a pleasure meeting you. And I hope 2020 is one of your best years ever, Brent.
Dale, I sure appreciate you. I appreciate your interest in me and my firm. And if any of your guests would like to reach out to me directly, there's a contact form on the website, or it's just my first name, Brent, at blacklioncta.com. Always love to meet new folks and answer questions.
Thank you so much, Brent. Good hunting, and let's do this again down the road, okay?
Yes, sir. All my best to you and yours, Dale.
All right. Thank you, everyone. Brent Carlisle, and you could find him at his Black Lion CTA, and that's also going to be his website, at Black Lion CTA. So everyone, I hope you have a good turnaround Tuesday. We'll see you tomorrow. Good hunting the rest of the day. See you in members chat. And remember, don't just count your pips. Don't just count your oil wells. Don't just count your Krugerrands. Count your blessings. You're welcome, Forex Skill.
Amen.
Okay. All right. Take it easy, Brent. Adios.